Hello guys, it's Matthias Trades back with another video. And I know it's been a while since I last posted, but I've been busy with basketball and school, and I really just haven't had time to post. So I'm going to try to get back to a regular schedule ASAP. I've been a fan of the BHP group for a very long time. I first bought their stock in October of last year, but have been researching it since the start of the pandemic. So the reason being for this video is the recent price reduction of BHP, or ticker symbol BBL. It has dropped from a high of $65 down to $50. So I thought, why not come out with a video on all of the positives of buying this right now at a discounted price. Without further ado, let's get into this video. In the opening slide here, we have the name of the company and the ticker symbol BBL. I repeat, BBL, BHP Group. Let's move on to our next slide. So what they do, kind of the about section, right? So this is a quote from their website. Our purpose is to bring people and resources together to build a better world. We do this through our strategy to deliver long-term value and returns through this cycle. Our products help build a better, cleaner future. This is a sugar-coated way of saying they are miners. They are a world-leading resource company headquartered in Melbourne, Australia, with main materials of copper, nickel, potash, iron ore, and metallurgical coal. Also, one that is not featured is lithium, which they are striving to produce more and more of each year. We'll get into this later on in the presentation. So let's start off with some basic metrics. They have a market cap as of 9/21/2021 of $129.9 billion, or $51.37 a share. They have a forward dividend of $6.02 a share, or roughly 11.81% dividend yield. Their price to earnings ratio for the trailing 12 months is 11.52, and their earnings per share for the trailing 12 months is $4.46 per share.
Wait a minute. Wait a minute. Wait, first of all, you're not going to speed past that like you didn't just say what you just said.
It's $4.46 per share.
You idiot! You're honestly an idiot. I don't know what's wrong with you.
Big company, big dividend, low price to earnings ratio. I like that. Now let's move on to the next slide. Here we have their Zacks detailed estimates. The current year expected EPS is $8.93 a share. If we remember back to our last slide, they hit a $4.46 earnings per share for the trailing 12 months. That means from that time period, 12 months back. So their current year expected EPS is almost double that. Also based on the estimates, they will have a dividend of $8 per share, or 15.7% yield. This will come in the form of $4 semi-annual payments. I actually just collected my $4 yesterday, and I can tell you what, it was a great feeling. Now let's move on to some key factors for this company's success. Number one being that Australia's corporate tax rate staying steady. Australia hasn't changed their corporate tax in 20 years, keeping it at a steady 30%. And you may be wondering, why is this significant? With taxes being potentially raised on American companies, this could lead to lower net income, which leads to lower valuations. Now, we wouldn't want the same thing happening with BBL. The next key is the price and demand for nickel, lithium, and copper. These materials are key in BBL's success. Nickel and lithium are key components in electric vehicles, so as the demand for electric vehicles increases, so does that for nickel and lithium. Same thing with copper, except copper has many more uses, as in basically anything electrical that conducts electricity needs copper. The last key is the ability to extract these metals from the ground, otherwise known as their execution. The better they'll be able to execute, the more money they'll bring in, which will lead to higher valuations and more dividends. Now let's move on to their latest earnings call. So I took out three positives, or I should say three keys from this earnings call. So the first one is the positive outlook for continued growth in commodity demand. Simply put, they believe the demand for the commodities that they produce will continue to go up. Now let's move on to the second key. Looking to divest their coal operations. As some of you guys may know, coal is a dying industry. So, if they can lower their exposure to this dying industry, it will only prove positive. Lastly, they are adding to their copper portfolio by partnering with junior companies in Mexico, Canada, and Ecuador. So you may be asking, what are junior companies? A junior company is a new company that is looking to develop a natural resource deposit or field. They're typically smaller companies that are looking for funds and guidance in order to grow. This will prove beneficial because these junior mining companies are looking for new deposits of natural resources. If found, this can be very, very, very profitable for BBL. Now let's move on to the future market trends. This is all predicated on a major increase in demand for nickel and lithium from the USA, China, etc. Basically the whole world. Lithium and nickel are needed in electric vehicle batteries. So without these natural resources, these batteries will not work. So let's take a look down here at the supply and demand curve on the bottom left for the market for electric vehicles. So as we can see, we have our S1 and our D1, which is supply curve 1 and demand curve 1. So you see here we have our equilibrium price. And so what happens when demand increases? It forces a shift of the demand curve upwards, right? Which leads to higher prices and more quantity. This isn't an accurate supply and demand curve only because this shift would actually be like 4 times bigger. We're talking about going from 5% of the world's cars being electric to something like 50. Anyways, let's look at the complement to electric vehicles, which is the market for lithium and nickel. Since these are complements, if the demand increases for one, it increases for the other. So our demand for lithium and nickel would go from equilibrium at supply 1 and D1 to equilibrium at supply 1 and D2. Once again, this would lead to an increase in price and quantity, which would be beneficial for the companies that mine said resources. Sounds like someone I know. The shift in the demand curve actually doesn't represent the potential upside. We're seeing a potential 10 times increase in the market for lithium and nickel. Now let's move into the takeaways. The success of BBL is predicated on the demand for electric vehicles and on the company's execution. The demand for electric vehicles will lead to higher revenue and more net income, but if they can't execute, it's all for nothing. Next, more revenue leading to net income equals higher share price and higher dividend, which is what we're going for. If you make more money, you're worth more. The rules of business. Next, looking to move into more future-based commodities. What I mean by this is moving away from coal, moving into more lithium, nickel, and copper. Once again, coal is a dying industry, so they're trying to limit their exposure to it. Lastly, a history of success and execution. BBL was founded in 1885, so they've stood the test of time tenfold. This is one of the oldest companies in Australia. Their ability to execute time and time again is what's going to set them apart from the competition and is one of our keys to success. So, if they can continue executing like they have in the past since 1885, they're going to see major returns in the future. Now, I can't end this video off without showing my works cited here. So, I will be leaving a link to this presentation in the description so you can come in here and click on the links, take a look at Yahoo Finance or Zacks or Seeking Alpha to get their earnings transcripts, or even their website just to read about them, some of their products. Now let's revert back to our original camera. Okay guys, let's wrap up this video. Firstly, I'd like to say thank you for watching all the way through, and if you enjoyed, please drop a like down below. Be greatly appreciated. Please drop a sub if you want to, of course. I make a lot of content similar to this. I do interviews, earnings call breakdowns, the whole deal. I gotta wrap this up, guys. So, you don't have to go home, but you gotta get up out of here. I'm Matthias Trades. Thank you for watching.